Hello everyone and welcome. In this video, I'm going to walk you through the tax equity financial model, a template that revolves around the tax credits, incentive mechanisms, and depreciation schedules available for the US market. In this first video, we're going to see the model's main sections and its main features. The model is divided into 4 distinct sections, represented by sheets with different colors. The first section is the results, where the user can see all the model outputs. The second section is the input section, and it serves as the data powerhouse, containing all the cells that require input from the user. It is the only section in the template where the user needs to provide information. The calculation section is where all the necessary calculations are performed. It is the backbone of the model, handling the computations and generating the results. Last, the support section. It comprises sheets that contain additional data or calculations that supplement the template. These sheets provide valuable information and contribute to the overall structure and readability of the model. Now, let's review each sheet in each section of the template so you can gain a comprehensive understanding of its structure and functionality. Let's go to start by the cover sheet. Technically, it does not belong to any one of the 4 sections in the model, because it only presents information that relates to the model in terms of the standards. As you can see here, we have the model sections and the model styling, and some legal stuff in the bottom part of the sheet. Let's move on to the next section, the results section, where you find 5 sheets. In the first one, you're going to see all the project's KPIs and graphs. On the top of the sheet, you're going to have the KPIs, broken down into 4 parts. The first one, we're going to find the general project information, then the source and use of funds, returns, and revenue and OPEX metrics. Then you're going to see the graphs, and you're going to find the revenue, tax credits and incentives, operating expenses, the cash flow waterfall, and the debt service coverage ratio, DSCR, the IRRs, and the NPVs. If you have purchased the version of the model that contains the partnership flip, we're going to find 4 graphs that relates to this structure. And if purchased the version of the model that has a scenario manager, we're going to find a table presents the results of every and each single scenario that you have simulated, with a few graphs where you can find the results of each one of the scenarios. Moving on, we're going to have in the next 2 sheets the cash flow waterfall. Everything's basically the same in each one of these 2 sheets, except for the CF annual, your cash flow is going to be based on annual periods, while in the CFW sheet, the cash flow is going to be based according to the setup of the model. As you can see here, every single period is broken down on a quarterly basis. Then, we're going to have the cash flow statement sheets. Again, we have 2 sheets in here, and they follow the same pattern as the cash flow waterfall, where the CFS annual has the cash flows broken down on a yearly basis, while the CFS sheet has the cash flows broken down as per the model setup. Moving on, we have the input section, which has 3 sheets. The first one being the input sheet. We're going to spend most of our time because all the core input cells that need to provide information to the model is in here. We're not going to go through every single cell right now because we're going to have a dedicated video for this. But just remember, this is where you're going to be able to provide all the information the model needs to run your project. Then we have the MACRS and scenario manager sheet. This is where you're going to rerun or run your MACRS every time you provide an information to the model. Because the model has 2 circular references embedded on it, we will constantly have to come over here and run the macro by pressing this button in here. We're going to also have a dedicated video for this one, so don't worry about the macros right now. And on the bottom part of the sheet, you have the scenario manager. If you purchase the version that comes with this feature, it is in here we're going to be able to set up to 15 different cases to simulate different projects and see what happens if variables change. Don't worry also, because we're going to have a dedicated video explaining how to use this feature if you need it. Then we're going to have the depreciation. Even though this is an input for the model, there's not much you can do here because all the schedules are already laid out in here. So I don't think you're going to ever have to come over here to change anything, unless you want to do a depreciation schedule of your own. The third section of the template is where all the calculations are performed. There are a few sheets in here, and I'm not going to go through this section here because it has literally over 1,000 rows of calculations performed. What is important to notice is the structure of the section, where we have in each sheet specifically calculations, such as the construction, all the calculations related to operations, such as revenue and OPEX. Then we're going to have our debt calculations, the returns calculations, mainly the equity returns, shareholder loans, distributions, and partnership flip structure. Then we're going to have our tax calculations, incentives, which is composed of tax credits and incentive mechanisms. We're going to have a dedicated sheet for the investment tax credit. Then we have the depreciation calculations. And lastly, the reserve accounts. For the record, we have 4 different reserve accounts. We have the major equipment replace reserve account. Then we have the debt service reserve account. We also have a working capital reserve account and a receivables reserve account. The last section of the template is the support section that has 3 sheets. The first one is the technical sheet, where we have some numbers that are going to be used throughout the templates and other sheets, such as the months in a year, quarters in a year, days in a year. Just notice that each value is an input to the model, but they also have named cells, and that's how you're going to refer to these technical numbers in the model. Then we have the checks and warnings. We're going to perform some calculations to check if the simulation is returning the expected value or result to the user. Then lastly, we're going to have the graphs sheet. We're going to have all the numbers that we need to put the graphs together into the results section of the model. And that's it. Let's going to keep moving on now.